We are almost at $4,000 gold, which some people thought was crazy. We just touched $40 silver. But let's talk about the investor's mindset. People are caught between the fear of missing out on the commodity run and the fear of a much bigger crash. So what's the biggest mistake an investor can make with their money right now?
I think being in cash too much, because your conclusion could be, okay, we live in a very volatile world. Things will move violently. And we saw that also in the equity markets in April with Liberation Day. You took a haircut of 15-20% very rapidly. People who sold in panic, they lost out because they missed the entire rally. But these things will happen. This is a world where you will see should be surprised to see a correction of $200 or $300 or $400 in gold at a certain moment in time, that these things can and will happen, but you're still way better off in these real assets than in the cash, because you can say gold is going up, but you can also say gold is gold. A coin or a bar or whatever, the lingo, what you want to buy, is still physically the same, but the price is moving. So you can say gold is going up, but you can also say the purchasing power of cash is going down. So after the fall of Bretton Woods, gold was $35. Today it's 3,500. It's time 100. But it also means that the purchasing power of cash has diminished so much. And I'm a little bit strange in the sense I know most tickers, I know most stock prices, I know commodity prices, but I do not know what milk costs or what bread costs. But in Belgium, we like chips. So that's a national food in Belgium. And I have a TV program each and every Friday evening in Belgium. And afterwards, I go to buy chips, so I know the price of that. After COVID, the price has gone up from 30 euros, and I almost pay 45 or 50. And that's in a couple of years' time. And when I do not get too big and too fat and then still living in 10, 15 years, the price will have gone up even more. So I think people do not always understand that it's not really the price of the goods is going up, but it's the purchasing power of the money that's going down. And just putting it in a saving account is not a good idea. So I think you have to be diversified. But above all, you need to own real assets and commodities and precious metals are certainly part of that.
I got to ask you too, for the audience, because I'll get a comment or two. I got to ask you, because in a previous conversation, you expressed a belief in blockchain technology. Today, obviously, gold at all-time highs. We're also seeing some bids with Bitcoin, still past that $110,000 mark. How do you view Bitcoin in its role in this new environment? Is it truly a competitor to gold as a safe haven asset, or is it simply another risk asset benefiting from cheap money? What are your thoughts?
Well, I think I'm going to piss some people off probably. I'm going to tell something. I'll start with a caveat. I've never made any money in Bitcoin myself. I sometimes invested or traded in stocks that do Bitcoin, so indirectly. And my wife always said to you, you're always glued to the screen. This is your job. You do nothing else than that. Why do we not own Bitcoin? And I always said, I do not always understand it. That's one thing. I'm an old-fashioned guy. I like gold. But I can only assume, and that's what you say, that indeed it's going up. Now, in my mind, it's going up a bit for the same reason as for gold, where people say, I need something else than this cash. And a little bit older people will say, I buy gold and silver because I feel comfortable with that. Younger people will maybe say, I buy some Bitcoin. But I also think that is also partly because there is so much money in the system, and money goes also to Bitcoin. And in my mind, it's not really a safe haven. It's more like the most speculative part of the technology space. Mm-hmm. And if you look at it on days, it's very often correlated with the Nasdaq. So I think if the Nasdaq would take a haircut, but we will have to see, and the proof of the pudding is in the eating. But if the Nasdaq takes a correction somewhere down the road, I would assume that Bitcoin will go with it and gold will go the other way. That would be my hypothesis, but it has to be tested. So we'll have to see.
I have to ask, maybe this is the gold thesis then. To close, let's look over maybe the next 10 years. What do you see as a grand slam, asymmetric kind of investment? The one theme in the hard asset space that's maybe most misunderstood today, but has the potential for the most explosive returns if your framework for the next decade proves correct here.
Yeah, then you make me choose between the stars and the sky, but will most of all be commodities. So I'm a big fan of gold, silver, copper. Yeah. If I have to pick one, I would maybe even prefer silver, because silver has lagged gold substantially. It's 50% industrial, it's 50% precious metal. I think the 4,000 in gold will coincide with 50 on silver, because 50 has been the top in silver already 2 times, once in the beginning of the 80s or the 70s, even with the Hun brothers, and then I think once again in 2011. So it would be a triple top reaching 50. We all know technically that triple tops do not really exist, so typically you break out and then the road is free to 100. So if I were to pick one, I would even though it's more volatile, I would even prefer silver over gold at
Wow,
this
good.
moment.
Lot of people watching. Yeah, a lot of people watching silver right now, Philippe.
Yeah, and it's been down and it's been disappointing for many years. It could not get any traction, and now it starts to move. So the silver mines. And then copper, of course, is more industrial, because that's still the heart of the electrical revolution. And yeah, you will need a lot of it, and you have not enough supply, even though a lot of gold miners are also investing in copper. You see some investing coming in, you see some takeover. People get on board at the fact that you will need a lot of copper coming in, but it will take a while. It will take 5 to 10 years before these new projects come online. And in the meantime, it will go up. And in the book we wrote that copper is going to double, and already it's not doubled, but already had a nice move. Then people say you're crazy. But look at oil in the oil shocks. Before the oil shocks, oil was 5. Then it went to 60, to 100, and to 200. So if a commodity gets into deficit, like silver is as well, it's not for 10 or 20 or 30%. It's times 3, 4, 5, 6. So that's what we're looking at. So I would certainly not forget about gold. I would prefer silver. I love copper. And the most speculative one is probably lithium, because that's down so much. That's a totally different dynamic, because in supply there is enough lithium probably, but demand is going to go way higher. And maybe if you're in for a trade, and we said, yeah, if China, of course, increases production again, the price comes down again. So that's maybe a speculative part, but yeah, for the people who really want to protect their portfolios, it would be probably silver, copper, and gold.
All right, I like it. Did you say $50 top, or I know you said when 4,000 hits on the gold front, it'll be a $50 silver?
I think that's going to be coincide a little bit, because if you know, I'm giving very specific levels, which is extremely dangerous, because they always told me that if you ever give a target, don't give a timing, and if you give a timing, don't give a price. But the point is, I think the road to 4,000 in gold is open. That would be 10 something percent. And then, of course, silver is going to move a little bit more. And then I think you will touch the 50 and 50 silver, 4,000 gold. I think you will pause a little bit, but that's the levels I'm looking at in the next 3 to 6 months, I think.